When I went from the offshore account to trade the pool, it was so much freedom. When I was trading with like Weeble and things like that, you only can trade 3 trades a week. And so
Yeah.
when I trade the pool every day, I could trade as much as I want. I wasn't used to being able to just kind of trade at any size and any time and pre-market, aftermarket, anything. And so I had to get really disciplined about the freedom that trade the pool offered me.
Welcome everybody to another funded trader of Trade the Pool. Today Bernadette is with me, a new funded trader. She's been doing it for a few times already, so we will talk about it and see the progress and the journey she had with us. How you doing? Thanks for
I'm
coming.
good. Thank you. Thanks for having me.
For sure. So let's start from the beginning, because you've been with us for a while now and you already passed the evaluation a few times, right? You've been trading the funded accounts. Tell us a little bit about how you got into trading and eventually into Trade the Pool.
Okay. Well, a friend of mine taught me how to trade many years ago, maybe 25 years ago. Just the
Wow.
basic. Yeah. And I did a little bit and I did pretty good. And then I would, it was hard to keep the account funded at that time, the capital. And so I always knew I loved it and that I would get back to it later. So fast forward, I went and tried to open up an account in December, maybe. I was a truck driver and I hurt my leg. So I got off the truck and I said, this is the perfect time for me to really throw myself in and start seeing if I can make a living doing this. And
Yeah.
I started trading a small account offshore, and it was just really hard to keep it funded, and it was a small account, so the fees and all those type of things got in the way of that. And so I was looking, I kept hearing people talk about prop firms, but I never saw a prop firm for stock. And I didn't know much about Forex, anything, but I was starting to believe that I was going to have to learn how to trade Forex in order to use a prop firm. And so I just went in a deep dive and started researching and came across the 5%ers. And I spoke to one of the customer service people, and she told me about Trade the Pool and told me that I would be allowed to trade stocks. So I was super excited, just because of the idea of more capital and more freedom. The PDT rule is always a problem if you don't have $25,000 to trade with. And so I was super excited to know that I can have, a funded account up to $25,000 without risking my own capital.
Yeah. And it's incredible because, when you trade in a small account, let's say even $5,000, and you're making 10%, it's still nothing to compare
Right.
to what you can do with a bigger account. And I mean, the same 10% that you're making on a 5K, if you make it on a 50K, you finally can breathe and actually
Right.
make a very nice living, right?
That's exactly right. Yeah.
So you've been trading with us for how long?
Since April.
Since April, and you already got funded a few times, right?
Yeah. Yeah.
Go
I
ahead.
was going to say that I think what happened when I went from the offshore account to trade the pool, it was so much freedom. When I was trading with like Weeble and things like that, you only can trade 3 times a week, 3 trades a week. And so when I trade the pool every day, I could trade as much as I want. And I think I just got a little crazy. And so I would do well, and then I would just blow it up. And, I wasn't used to being able to just kind of trade, at any size and any time and pre-market, aftermarket, anything. And so I had to get really disciplined about the freedom that Trade the Pool offered me and try to reel myself back in.
Yeah, it's amazing what you're saying, because on one hand, we do give the freedom to do literally almost whatever you want with your trading. On the other hand, sometimes freedom can be, a barrier, right?
Right. It takes a long time to just develop some boundaries and, kind of find where my edge was. And that took a while, and it was frustrating, really, in the beginning,
Amazing. And as you mentioned before we started the recording, it's a process, right? It's a journey that you're going through. Even after you reach the funded phase, even when guys are reaching the payout phase as well, you're still always learning and developing your skills, right?
That's exactly right. And I thought once I got funded, I was going to be smooth sailing, and it's just not that easy. You still got to be able to manage yourself in spite of having the freedom and the capital. It's not really about that afterwards, because you realize if you can't manage yourself, it doesn't matter how much money you have, you're not going to be profitable.
And what is it that you do, when you understand already, okay, I know how to become a funded trader, now I need to improve. On what level? What are you looking to improve?
Yeah, I was trying to size up. As soon as you get funded, now you want to size up because you want to pay out, and that was just the wrong way to look at it. And I should have kept doing what I was doing from the beginning. But you get in there, and then you just see opportunity. And if it doesn't go your way, if you're in there with a large amount of shares, then that just takes you right out. And that's what happened to me. I was starting off real small, and then I went up in size, and the trade went against me, and it just take me right out in a matter of minutes. So that's been my biggest problem. And in the pre-market, you don't have, you can't do the stop. You have to manually take your stop loss, and then you start thinking, oh, maybe it'll come back around, and it's just all the mindset of believing that trade is going to turn around for you, and when it doesn't, it just takes you out.
Yeah, I remember when I started, and started to build my, like you said, sizing up. And instead of going from 100 shares to 200 shares, I went from 100 to 1,000. And obviously, I definitely blew up there. Yeah. But then when you realize you need to do it chunk by chunk, right? One step at a time instead of just going all in. And then you really finding your rhythm. Yeah, that was a good one. So
that's been my biggest issue. Even today, I just get in and get like I got this, and I go in too big, and then when it goes against you, you could be in there for small size and still blow up your account. You really could if it just shoots up for news comes out, anything can change everything.
Yeah, it's for sure. This is definitely one of the main issues, the main mistakes traders do when they trade, just sizing up correctly. And for those of you listening, we got a few funded traders that talked about it on their interview, like Michael T. and also Arbner, so you can definitely check them out.
Okay.
Yeah. Alrighty, I'm going to share my screen and show you a dashboard for the guys at home. Each trader gets his own dashboard once you sign, so you can, track your stats, see the progress. Okay, so this is your account. Basically, you're trading 50K account. This is the funded account already, so already passed the evaluation, got to the funded phase, the 50K. A profit target is basically you need to reach a $5,000 or 10% in order to scale the account. Every time you reach a 10% target, you can actually get more buying power and more daily allowance, daily loss allowance, the daily pause, the max loss, the daily pause. And you had a nice run straight from the beginning, right? You reached the 52 mark, 52,000, so $2,000 in profit. And a drop, like you mentioned before, when, one trade, and we will talk about your trading in a second, but one trade can actually cost you the entire account or a lot of the profits, right?
Yeah.
Same goes here. So let's talk a little bit about your trading style in this case.
Okay. So basically, I trade pre-market, and I try to do, because I was so new to trading, and I try to get up at 4 a.m. and get in front of the computer, and I'm doing these pop and drops. And so what I started realizing was I used to try to go long with them, but it was almost impossible, because as soon as they go up, I noticed that they would drop down so fast I would lose. So that's actually how I learned how to short. And I didn't even know how to short in April. And so then I came back around, and I started realizing that at 4 a.m. I could get up early, and I could get in and kind of build a position. And then when the drop would come, I would really be profitable. But when that one turns against me, then it can just knock me out for the whole day.
Yeah, exactly. And so that's amazing, because your numbers is crazy, right? The 0.1 on the risk reward, so it's very negative. On the other end, it's actually 95% success rate. It's without the zero, 95% success rate. And also looking at the advanced statistics, lots of trading, right? Like I said, a lot of like you mentioned, short trades, most of them, 60 trades out of 62.
Right.
average profit is way lower than your average loss, as we just saw on the risk reward.
Right.
So you're going very nicely in, but taking a very small profit comparing to when it's not going your way. Like I just saw this trade, for example, GCTK. So you tried it, but when it popped,
Yep.
you actually lost $1,000 on it, right?
Right.
What's the strategy here? How do you decide when to cut the loss?
My whole idea is that, scalping, and if I can do a certain amount of scalps a day, then I can average a certain amount per day. So if I scalp 20 and at one point it was like $10 or $20, I knew I can have a $200, $300 day. But when that one goes against me, like that was actually today, it moved so fast I couldn't get out. And then when I looked at it, I still believe that it was going to go back. When I'm using the Fibonacci retracement, so I was feeling like it was coming back down, but I just could, you can't time it. And so I actually went back in and wrote it back down and was able to come out and draw down a little bit more. But I really need to get better with my stop loss because, when I lose big.
Yeah. And you know what? I can relate to some of what you're just saying, because when I'm trading a lot of my success rate is pretty high, not 95, but around the 85% from time to time. And I get that my risk reward is a good one, but still when I'm losing, I can easily lose more than I'm winning, right?
Which on a monthly, I try to look at it on a monthly basis. If I'm making $300-400 a day and then I lose $1,000 just 2 or 3 times a month, I'm still profitable. But
exactly.
I just pull myself back in where I'm not losing. But I really should be putting a stop loss in and aftermarket, and not losing as much as maybe $100, but not 1,000. That's just. But that's again me being reckless because I never had the opportunity, with the freedom to be able to do that. I would have stopped if it was my money on my account, I would have stopped out and just took the loss. But because I really always felt like I got a little bit more flexibility, I just stayed too long,
Yeah, like we said, you're getting the freedom to do it. On the other end, you still need to control yourself and actually stop yourself from losing that day. I mean, we do have the daily pause to protect you on this one. And this is also something that a lot of the traders really, most of our funded traders will say this is by far the most important element that we have, besides the funding, of course, the fact that you stop for the day and no matter what, you're good for the next day, right?
Right. I like that.
Yeah.
So
amazing. So what's next? How are you going to handle? Let's talk about this issue because it's interesting, I'm sure, for the guys that listen in as well. And of course, just to work on that. How are you going to handle the fact that those trades from time to time will hit you strong in this case?
Yeah, I'm just after today, I'm just like, this mistake is just so common for me. I'm not gonna size up. I'm just gonna go in with my regular amount of trades, which is usually like 300, and try to stay there. And then if I'm losing, 10 cents, then I'm just gonna come out manually instead of waiting and holding, because I can always get back in. But I guess my thought process was I can't get in where I was, and if it drops, because it drops so fast, I don't want to miss the move. And I never really know when it's on the other side of the move, and I can really call it wrong, and then then I'm in too deep. So in the pre-market, I'm just gonna stick to a small amount of shares, and try to control myself, because it's really on me. Wanting to size up when I see that it's going in my favor.
Exactly, that will be a better move in this case. Just because there are, those penny stocks. I actually took a challenge last week and traded penny stocks the entire week, and that was great. But still, they're so aggressive. Once it goes against you, that could pop like crazy.
Yeah, they really dangerous, and I would like to get into the large caps, and but my schedule was really not going to allow me to trade aftermarket. So now I'm able to do that. So I want to give it a shot. I trade Tesla sometimes in the video, and I do pretty good when I'm there. So I think I'm going to focus on that too, because I just think that I'll be able to manage the trade a lot better. Stop losses and, just.
Yeah, That's for sure. On more liquidity, and obviously in most cases they want just drop or pop.
Right. They might, but not like they do in pre-market.
Definitely. Amazing, Bernadette. So first of all, thanks so much for the interview and everything that you just shared with the guys.
Thank you.
And for those of you at home that want to check us out, go to tradethepool.com. And after you pass the evaluation, we'll go through the interview. And from there, it's easy way to the pale path. Thanks so much again, and we'll be in touch.
Thank you.